All right, ladies and gentlemen, welcome back to the channel. I promise I am not a fortune teller, but we were spot on yet again. We did get a bullish Fed, which did send the Russell, the IWM, up almost 3%, as I thought we would go up 2 to 3% on small caps. And that's exactly what did happen today. Now, AMC stock as well is up about 2% here on the day today. A lot higher than where we were earlier in the day when AMC was at $6.50. Actually, today was a new low for AMC over the course of the last couple of years. So this may have just saved everything. We're going to get into what just happened, what the dot plot says, some of the most impactful statements from Fed Jerome Powell. We'll give you an overview of where we are at in our markets. I think the floodgates of capital have just started to open. This is $6 trillion, $6.2 trillion in money market funds. This is multiple trillions of dollars in cash on the sidelines. This is trillions of dollars in treasury bonds themselves that are likely to start coming back into stocks. Because of this, Fed Jerome Powell and the Fed just confirmed what I expected. The summary of economic projections. This is the most important thing of the day today. And you came in at a federal funds rate projected rate for 2024 at 4.6%. This is where we were at in June. So this is implying 3 rate cuts for next year. Now, it's not the 4 or the 5 rate cuts that markets have been pricing in, but it could have been a lot worse. This is the Fed actually confirming they're going to cut rates multiple times in 2024. That, my friends, fantastic news. Fantastic news for stocks. I don't think it really could have gotten much better in that regard. Right? This is the first summary of economic projections, the first projection that we have, gotten in quite a while, since September at the very least, that actually shows a significant amount, relatively speaking, of rate cuts coming next year. Now, if we continue to see inflation abate and fall and the economy just continues to chug along, then we're probably going to get even more rate cuts priced in. So this is a first step, and quite a big first step for stocks out there, for our markets. That's the first thing that happened. The federal funds rate projected rate fell to 4.6% by the end of 2024. PCE inflation also fell to 2.4% from 2.6% as the projected rate by the end of 2024. PCE inflation fell from 2.5 to 2.4%. The unemployment rate stayed the same at 4.1%. So Fed officials are expecting lower rates and no real increase to unemployment compared to what they were expecting in September. That's great. That's the soft landing. And change in real GDP actually went down a little bit from 1.5% as the projection in September to 1.4% now for the projection for 2024. So this was your best possible outcome for the day today. Your most realistic possible outcome actually did happen. The outcome in which I thought would happen actually did happen. Now, based on this, 10-year Treasury yields are falling almost 16 basis points. 16 basis points. That is, pretty off the charts, considering where we have been recently at about 5%. Now you're down to 4.047%. Huge move lower. Now, if we take a look at the dot plot itself in regards to the federal funds rate projected rate for 2024, it says, and we're looking at this column right here, so directly up. One Fed official expects rates lower than 4%. Wow, that's wild. Here is the average right there at about 4.6%. Quite a few Fed officials expect rates under 4.5%, 5 in total, but 4 right here, right under 4.5%. That would be implying that fourth rate cut. A couple Fed members, 5 Fed officials expect rates to be slightly under 5%, and 3 officials expect rates to be above 5%. So overall, this is great news for stocks because you just have so much capital on the sidelines that, you know, is in a position to be looking for yield, to be looking for gains heading into 2024. And I think, you know, this first U-turn for Powell, for the Fed, as long as nothing drastically changes or gets worse from here, this is your first bit of, I guess, a breath of fresh air that you have gotten from the Fed at all. I mean, this is the first instance of this, and that is pretty dang exciting. So we do have a couple of comments from the Fed. This is a great tool for you guys to use on X. Breaking market news. They got the yellow check mark. They basically give you all the headlines you need to know that are important for markets, like as soon as they come out. It says, Fed Powell's above trend growth could ultimately mean that we need to hike again. On the labor market, wages still running a bit above what is consistent with 2% inflation. We are aware of the risk that we could hang on too long on rates. We're very focused on not making that mistake. He was basically asked, or kind of a statement question. One of the reporters said, you by your own admission was too late to start raising rates. How do you know you're not going to make that mistake again? And that was what he said, that there is that risk that they're just too slow to start cutting rates and that they do not want to make that mistake. He made that very clear. Now, Fed Powell says we haven't worked out if we will follow a threshold-based path for cutting rates. Like if we get this, then we'll cut rates. Obviously, it's probably not going to work exactly like that. But I mean, they're already saying they're going to cut rates 3 times. It's not going to take much more for the markets to pressure them to cut even further. Now, Fed Powell says we've seen reasonable progress in non-housing services inflation. He was really excited about this one in particular. Fed Powell says, I believe some policymakers did update their forecast based on data from today. That was PPI that came out at 0%. We were expecting a slightly positive number. PPI came out at 0%. That was great news. And CPI yesterday was a little bit of good news as well. Now, Fed Powell says you need to reduce restriction on economy well before 2%. He was asked, like, are you going to start cutting rates before 2%? And Powell said, well, yeah. I mean, we're not going to just stay at 5.5% until we get to 2%, then basically your odds of recession are a lot higher at that point. Now, Fed Powell says, we think the supply side help for inflation has some ways to run, so more disinflation could come from there. Fed Powell says, we are not talking about altering the pace of QT. This is actually seen as pretty positive in my personal opinion, because, I mean, that shows a certain degree of confidence about the economy and about the credit markets, right? QT is just letting treasuries roll off, which does help rates go higher. Just based on supply and demand. So if they're not worried about that, that's actually great news. Fed Powell says we're not at the level of reserves when we would need to slow or stop balance sheet runoff. That would be, if you look at the reverse repo market, that's something that you can look at. Early MOC, market on close imbalance, 261 million to the buy side. So it looks like buyers are coming out and buying themselves some stocks, AMC included. AMC, let's take a look at the option activity here. First things first for AMC. AMC is at $6.85 per share. So that low that you've seen today just got eaten up. And I do think this opens up the floodgates for billions and billions and billions, potentially trillions of dollars to head back into our markets. Once the Fed starts cutting rates, very, very rarely have they ever started raising them again. Most of the time when the Fed starts cutting rates, they start really cutting rates, right? So usually the Fed's wrong. Usually when the Fed projects rate cuts, they really should just go ahead and save themselves the trouble and just price in a bunch of rate cuts, because that's ultimately probably what's going to happen. Now let's take a look at the Ortex data, a couple different things, then we'll go ahead and wrap up this video. You have a short interest percentage of free float at 10.74%, $142.79 million worth of short positions. Days to cover 1.03, 21.25 million shares that are currently sold short. Shares out on loan 10.64 million, cost to borrow 1.17%, utilization of 23.41%, and a short score of 52.89 out of 100. So, you know, not the best data here. Okay, a couple different things that are going on. Obviously, money's going to flow back into stocks like AMC, higher quality, small, mid-cap names. That is my expectation. But, you know, as far as these data points, if they're correct or not, I just simply don't think so. So that's why I continue to hold AMC. And AMC continues to perform today, now up about 2.5%, as we are taking a little bit of a leg higher here for IWM. IWM is up 3.2% today. Off the charts, what kind of move that you are seeing. So we already went over 10-year treasury yields continue to fall, now down almost 18 basis points today, getting absolutely crushed. Take a look at the Stonko tracker data as well. You do have 5,500 calls that are currently in the money, 214,000 calls out the money, 28,000 puts in the money, and 80,000 puts out the money. If you do see this capital go into our markets, as I'm expecting it will, if AMC can break above $7 per share, that's where you're going to see a lot of puts go out of the money. That's where you're going to see a lot of calls go into the money. And that could be very positive for AMC stock in terms of a potential gamma squeeze and sending AMC stock much higher. The percentage of stocks above their 50-day moving average today is now up about 6%. Insane. At 76.29%. You're at some of the highest points that you were at during the summer rally. I think this one is fundamentally a lot more justified. So don't be surprised if you know, stocks continue to do well from here. In the grand scope of what I'm saying, the Russell 2000 has a market cap of 2.23 trillion. There is 6.2 trillion in money market funds. So if you get even a fraction of this money heading out of money market funds into something like IWM or small caps, you're going to see a lot of inflows for AMC, for other names that you might be invested in, and that's going to be very good for AMC and those other stocks. Really everything besides big tech. Big tech I want to stay away from right now, because I think money could actually flow out of big tech, as we're now, you know, looking at rate cuts from the Fed in 2024. I want to stay away from big tech, but I mean, still, maybe not a terrible place to be in the grand scope of things. If the economy does worsen, that would be where you would want to be. If you look at Microsoft, for an example, IWM's up 3%. Microsoft's down 0.65%. Apple is only up about 1%. Really, I mean, ever since you peaked here in Apple at $198 here today, Apple's been coming down, whereas IWM has just been soaring. So a lot of new money is getting put to work today here on our markets, and I think an even larger rally could be to come. This could send AMC stock in due time over $9 per share. Probably by the end of this week, we're going to be approaching $8 per share, if not above $8 per share. I think tomorrow's going to be very, very good for AMC, but we do have some data coming out as well that I really don't want to leave out of this video. So tomorrow you're going to get retail sales month over month for November. You're expecting negative 1%. If we come in line with estimates, fine, that's okay, right? That would show the economy's not running red hot, but you don't want to see a really bad number here also. That would be bad news for markets. You don't want to head into a recession. Well, I was looking at the wrong one. Retail sales are expected at negative 0.1%. Export prices expected at 1%. Import prices expected at negative 0.8%. So again, same point here. You don't want to see super negative numbers. If we did, well, that would obviously be a problem. Maybe we get more rate cuts in that instance, but markets are always going to fear rate cuts more than they like, or markets are always going to fear a recession more than they like rate cuts. So go ahead and keep that in mind, guys. That is basically going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching. Till next time, enjoy the rest of your day, and I will see you in the next one.